The overall market was a grind today. The SPY slid to 635 in midday code red, clawed back towards 640, but still closed down 0.65%. Meanwhile, gold ripped to new record highs, surpassing September 2011 levels, and so we opened a new position in GDX. Today felt like a sell-on opening, buy the bounce, but not enough to save the session. Let's take a look together. All right, let's get started. Let's take a look at the portfolio. Look at this chart for GDX. GDX has rallied up here far beyond the 3 ATR northern boundary. And if you just take a look here, this is really interesting. If we go down to the monthly chart and we take a look at 20 years, so we can take a look here, we can see this is where we are now. And then you step back, this is where we were about a year ago. And so each one of these little increments here is a year. So we're down into 2022, 2020, 2018, 2016, 2014. We have to go all the way back to September 2011, which is right in this ballpark, for us to see here. Let me close this out so you can see here. Right about here was our high, and we passed that today. So we decided today was a good time to put a position on in GDX with IV rank at 44.3. But before we take a look at that, let me go ahead and just change my chart back here so I don't forget to the, 1 day, 1 year chart. All right, so let's go take a look at our positions and see where we're at here. All right, so we'll sort these alphabetically, and we'll take a look at Chipotle. Chipotle is a vertical put spread, rather. And let's zoom in here. We can take a look at where we are. So this position has gone against us a bit. Remember on Friday, we rolled this one out until the October cycle. And so this one had a down move today, or over the last couple of sessions it did. We're still trading mid-range here, and we're looking for a rally in Chipotle. Good thing is we have 45 days to make that happen. Realistically, we have about, what do we call that? 21, 45. We have about 24 days to make that happen. Otherwise, we'll have to roll it again unless it just really goes against us. Let's take a look at IBM. And we'll go to the analysis tab, and on IBM, we seem to be trading right around that same range, 241.50. Yeah, we're kind of in the range. We were down a little bit earlier today and then came back up. So nothing to do there. Another 45 days on that one as well. All right, let's take a look at this new position that we put on here in GDX, because I threw it on earlier today but didn't really do anything with it. So remember, when you put a new position on, you probably want to keep it organized. So the first thing that we're going to do is we're going to group that position. So we select both legs of this position. We right click and we go to group positions, and we're going to choose strangle. Now, Tasty already knows that this is a strangle. We would double check that, of course. If it wasn't a strangle, we would adjust it. Sometimes I'll put my own name in there. If it's an inverted strangle, I'll call it inverted strangle. But in this case, it's a brand new position. We're just going to call it inverted strangle. Now, the next thing that we need to do is we need to put our good till cancel order in. So I'm going to take both of these legs here. I'm going to select those, and then we'll go to close for profit 50%. Because this is a brand new position, we can do this. But if we had rolled maybe the puts or roll the calls or roll this whole position out to another cycle, we wouldn't be able to put our good till cancel order in on that one after being rolled, because it doesn't take into consideration the previously collected credits. So we wouldn't be able to use the close for profit 50% here. So just want to call that one out. You can use this on brand new positions, and you can double check the math if you want to. And so we'll do that. Let's take a look. So if we set this up for 50% profit, we're going to close it out here. It's going to set it up for 69 cents. So let's go back to the position here and see what we collected. So let's go to the options chain here. We can see that we collected $1.39. So if we open up our calculator and we say 139 divided by 2 gives us 69.5. So it's right on the money. So we can go ahead and use this. All right, so let's go to close profit 50%, good till cancel, review, and send order. All right. So we have that one set up, and it's just ready for it to close whenever that happens. Hopefully, it happens within the next couple of weeks. Even sooner would be greater. All right. Let's take a look at our activity to see what closed since our last time together. So, GDX was a sell to open. CRM was a roll from what was that? Oh, CRM. We actually bought the guts and sold the wings on CRM, and we did this after the fact, after we rolled out to October. I initially just roll the legs as is in October, and then decided I'm going to sell the guts, buy the wings, and recenter and get those legs at a better delta, so that we're just collecting as much theta as we can on those. All right, so nothing else to show there. Positions are thin right now, simply because volatility has been low. We did have that spike in volatility today. In fact, we can see that, well, these are yesterday's numbers or today's numbers after the close, but we can see that the VIX futures were up 6.51%. So if we click on the VIX here, let's take a look. You can see here, we did bounce up earlier today, and then we kind of came back down closer to the open. I traded just a little bit later in the session today when this had already come back down. There really wasn't a lot of opportunities out there that really fit our criteria. So we weren't just slamming on positions today, but it is worth keeping an eye on, because if we get a greater move up in VIX and volatility, then we'll start to see some opportunities to lay on some more positions. All right, join us again tomorrow for another session of Decay Factor. Thanks for watching.